Now let's talk a little bit about the effects of those rate cuts here. Tech stocks rallied on Wednesday after the Federal Reserve delivered a 25 basis point rate cut, and Fed Chair Jerome Powell signaled that more easing could be coming. A shift partly driven by a cooling labor market and growing downside risks to employment. The NASDAQ 100, as closely tracked by the QQQ, recouped all morning losses and turned positive heading into the close, reclaiming the 200-point area. Tech stocks had slumped earlier in the session, with AI-linked names like NVIDIA, Broadcom, and Palantir falling as much as 3% after China announced a ban preventing domestic firms from purchasing AI NVIDIA chips. The Fed cut lowers the federal funds target to 4 to 4.25%, marking the Fed's fourth rate reduction in the current easing cycle and its first move after a 9-month pause. It also comes after months of public pressure from President Trump, who has repeatedly called for lower rates to support consumption and investment. Now, it is worth noting here, after this happened, Trump did post that he was unhappy because he wanted to see a bigger cut. He said that before the rate decision, and he said that again after the rate decision. That's just food for thought there. The 0.25 percentage point cut was not unanimous. Fed Governor Stephen Miron, a recent Trump appointee replacing Adriana Kugler, dissented, arguing in favor of the 50-point basis cut. According to ProData, the top performing stocks with market capitalization above $10 billion during Powell's speech included a lot of the stocks that we have talked about here, in particularly recently. Nebius, ticker NBIS, up 4.2%. SanDisk, which interestingly we talked about earlier this week being a little extended and maybe making for a possible regression back to the mean, that was up another 3.51% yesterday. Ionic, the quantum computing stock that we followed, that was up 3.29%. It's not on this list, but it's also worth noting that Rigetti was up as well. That looks like it's at highs and might be making a double top on the daily chart, FYI. Oklo, the nuclear power stock that we've often traded here, that was up 2.93%. Reddit was up nearly 3%. Joby was up 2.75%. Even NEO up 2.64%. Palantir up 2.6%. Tesla up 2.4%. And Roblox up 2.42%. Now, Powell said that the Federal Reserve's decision to cut rates by 25 basis points was driven by the shift of balance sheets of risk between inflation and employment, with the labor market now showing clearer signs of softening. Powell called the move a risk management cut, clarifying that while economic growth projections have ticked up modestly, the Fed is now acting preemptively to support the labor market before a downturn takes hold. On inflation, Powell acknowledged that headline and core PCE inflation remain elevated at 3% and 3.1% for 2025, respectively, but said that the recent rise in goods prices, partially linked to tariffs, is not expected to lead to a sustained inflation breakout. I'm sure there are a bunch of people that were calling for hyperinflation that are hyperventilating right now, but it looks like Powell here doesn't see the worst case scenario. Still, Powell added, quote, "Our job is literally to make sure that that is what happens," end quote, underscoring the Fed's continued commitment to its 2% inflation target. Asked whether the Fed's independence is being compromised given President Trump's growing influence and the recent appointment of a new FOMC member with executive branch ties, Powell said, quote, "The committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence," end quote. The summary of economic projections now implies a federal funds rate of 3.6% by the end of 2025. That's lower than the 3.9% median estimate for June, suggesting that more cuts could be on the table. Really, the question here is, how many cuts are going to be on the table? We were talking a little bit about 3 cuts. Now there's some talk maybe about only 2 cuts. We did not get the 50, which was another possibility that we were kind of floating before this. So really the question is, how many more cuts here in 2025? The Fed, Powell said, has moved one step closer to neutral, but stands ready to act again if the labor market deteriorates further or inflation surprises on the upside. Quote, "There's no risk-free path here," end quote. And I think that's the key. Whatever they decided to do, each part of the calculus had risk. They decided to go this way. I'm assuming that's because they feel that this is the least risky way to go. We'll see how it shakes out. Asked whether the current rate cuts rate cuts risk fueling a financial bubble, Powell responded that despite record equity levels, there's no evidence of systemic imbalances.